Looking at homes in high-cost areas like San Diego, Denver, or Washington, D.C., you don't think your VA loan may cover homes at that expense? Well, you might be surprised what your VA loan can actually cover for you in 2025. Coming up, I'll walk you through what the VA loan limits are and how they apply to you, how VA jumbo loans work if you want to buy above the county loan limit, and what factors determine your max buying power and how to improve them. One of my clients, who is a retired Navy officer, was looking to buy a house in the San Diego area. He's looking at buying a $1.4 million home and had always heard about jumbo loans, not VA jumbo, just jumbo loans. And at that price point, him and his wife were really swayed towards going into a jumbo loan because that's what they had heard was so awesome and so great. So what we did is we put them head to head and compared them. And when we compared the VA jumbo loan compared to the traditional jumbo loan, because the VA loan is so much more malleable, we're actually able to qualify them for 30% more home than they would have been able to qualify for under a traditional jumbo loan. Just goes to prove the point of how powerful the VA loan is. They were able to buy a $1.4 million home, and with the regular jumbo loan, they were much closer to about a $1 million purchase price. So not only were they able to qualify for more loan, but they also didn't have to have a down payment, so they kept way more money in their pocket. Instead of putting out over almost $300,000 in down payment, they were able to go in there with zero down payment using the VA loan. So what are the VA loan limits in 2025? Well, let's clear something up right out of the gate. The VA loan limits have been removed. There is no actual loan limit in 2025. Back in 2020, there was legislation passed that removed the VA loan limit. So as long as you don't have any used up entitlement, sky's the limit. As long as you qualify, you can buy a very high dollar home with zero down payment. We've done VA loans for up to $4 million and even $6 million with zero down payment. That said, the loan limits still matter if you have outstanding entitlement. If you already have an existing VA loan and now you're trying to buy another house, keeping that previous home on VA and using VA the second time, now the county loan limits come into play because you have what's called outstanding entitlement. So here's how it breaks down. In most counties, the loan limit is around $766,000. For areas that are more high cost, like New York or San Diego, for example, those high cost loan limits are going to be much higher, over $1 million. So for example, if you were PCSing to Colorado Springs and you were looking to buy a house for $822,000, well, then you had zero outstanding entitlement. You could purchase that home with a zero down payment. But let's look at how the VA jumbo loan works if you're trying to buy and you already have outstanding VA entitlement, but you're looking to buy in that jumbo space again. So when you have outstanding VA entitlement, what we're going to do is pull your certificate of eligibility and determine how much entitlement is already allocated or outstanding towards the current home. And now we're going to look at the county that you're moving to and pull the county loan limits in that county. The VA loan will allow us to still finance you and have two loans, but if you're going to go over what this net entitlement number is, you're going to have to start bringing in some down payment. So in summary, and we have a video on this on my channel to break this all down in detail, but the new county loan limit times 25% is the available entitlement in this scenario. Then what we have to do is subtract your already used entitlement from this number to give us a net entitlement number. This number times 4 is essentially your new zero down payment loan amount. But for a lot of folks, especially moving into high cost areas, that new zero down loan amount isn't going to be enough to purchase the house. So what the VA says is, hey, we've capped out here at this particular number as far as what we will guarantee. You can go over that for sure, but you have to now self-guarantee. So for every dollar you go over this new zero down limit, you have to bring in 25 cents as a down payment. Here's what most veterans don't realize. You can buy a home priced well over $1 million and use your VA loan with zero down payment to make it happen. So what factors determine your max purchasing power using the VA jumbo loan? Your debt to income ratio, or otherwise termed as DTI. This is something that all lenders look at for every type of mortgage out there to determine your borrowing capability. The objective is to provide you financing, but not make you mortgage poor. So the VA loan is the most flexible of all mortgage products out there with regards to debt to income ratio, because in the VA loan handbook, there's no set maximum debt to income ratio. In fact, the VA uses another metric to determine how much loan they'll be able to lend you. That's the residual income calculation. So depending on the area of the country that you're purchasing in and the size of your family, the VA has established a minimum amount of money that you need to have left over after all your bills are paid. So what we would do is formulate the proposed mortgage and also your liabilities, auto loans, credit cards, and so forth, and deduct that from your gross monthly income to see how much money you have left over. Again, the VA wants you to be able to live a life and not be mortgage poor. So if you were a family of 4 and you lived in the Midwest, you would need $1,003 left over after this calculation to meet the VA residual income requirement. For most lenders, we're able to really stretch your debt ratios pretty far when you're able to exceed that residual income by 120%. So if you have more than that $1,003 by at least another 20%, now we're going to be able to really stretch that debt to income ratio, provided the rest of your file is strong too. We have done loans with debt to income ratios upwards of 72, even 74%. Now, while that is not ideal or the norm, it's very possible someone who has, great reserves, high credit scores, and they have exceeded that VA residual income calculation. Credit score is the other one that's super important. So while the VA doesn't set a minimum credit score, the lenders do set minimum credit scores. And typically, as with any type of borrowing, right, the more money you want to borrow, then the more impressive you need to look on paper. And it's no different with mortgage lending, even when you're getting a VA loan. So if you wanted to go borrow $1 million or $2 million or $3 million on a VA loan, the higher your credit score, the better the financing opportunities are going to look for you. The underwriter is going to be a little bit more forgiving and allow an approval on somebody who has an over 700 credit score on $1 million+ loan versus someone who has a 620 credit score on $1 million+ loan. Can they both get the loan? Absolutely. But the lending terms and the criteria might be a little bit different depending on what the credit scores are going to be. So the bottom line, if you're looking to use your VA loan in 2025, understanding VA county loan limits and existing entitlement is going to be super important and impactful to your next purchase. If you're not sure where you stand or how much you qualify for, let's talk. I'll walk you through the numbers, check your eligibility, and put together a plan for you that works for you and your family. Click the link in the description or visit my website at valoanguy.us to schedule some time together. And if you found this video helpful, please like, subscribe, and share it with a friend.